Hi, welcome to this video today, which is on the 5th of August. It's Monday, it's 3 p.m. GMT. Just going to give our updated outlook for the Forex markets for the week ahead. Now, we started off the week nice and volatile. In fact, since August has started, we've seen plenty of volatility. We did a video on Thursday, on August the 1st. We were saying we expected some big trends to follow through and to basically be confirmed. And we've seen that happen. Some really fantastic moves in the markets. I'm sure a lot of Forex traders are doing really well at the moment. We're up a good few thousand pips on our open positions. I'm hoping that we can add to those profits. Now, in terms of the markets, hugely significant event has happened, in my view, which is going to keep the volatility high. And as Forex traders, you need to understand its significance just generally for Forex pairs. It's People's Bank of China allowing the USD to rise on the yuan. That is so significant in our view. The USD continues to rise. You're going to see real turbulence in financial markets. And in terms of the way that we think is the best way to trade or the best strategy, it's always to go for the really big trends. And the big trends at the moment are very much in favour of safe currencies over risk. And I think that will continue. Now, what we are going to do is we're going to go and look at some trades in the market. Plenty of great risk reward trading opportunities this week, so quite a few charts. I'm going to explain the significance of the People's Bank of China's move and also what's going on in stocks and bonds, because that's going to have a real impact on Forex markets as well. We could be in for the best trading conditions going forward in many, many years, in my view. Okay, right, let's go and take a look at the charts, but please do keep in mind it is my view as of right now. It can change in line with the market conditions. If you want all our trading techniques, our daily technical sentiment analysis of 14 Forex pairs, you can click on the link beneath this video, get live access to our members center. Now, I just finished a few hours ago updating all the charts in the members center, so I'm just going to use the charts from there. So let's go and take a look at some trade setups. But first of all, we could discuss the significance of the move in USD Chinese yuan, or CNH, and why it's just so significant. Right, let's go to the chart. Just on the USD CNH daily chart, and even if you're not trading this pair, keep your eye on it because it's going to have a big influence across all Forex pairs in the financial market. So we can see fairly gentle price action, then off goes the USD to the upside. Now, in terms of why this is so significant is that China have decided to strike back in trade wars. They don't look like they want to negotiate at all. They're letting the USD rise on the yuan to offset the impact of US tariffs. Of course, if you make your currency weaker, your exports become more attractive. So it's an escalation of trade wars. The Chinese, I'm assuming, are trying to put pressure on Trump to blink. He doesn't look like he might at the moment, but I think that's the strategy, to just keep letting the yuan fall or the USD rise. This is unsettling financial markets as well, and basically giving the safe currencies a real push up on the risk currencies, because it exports deflation around the world if the Chinese do this or continue to do it. That means you're going to get currency wars with other countries trying to keep their currencies down. It's an escalation of trade wars and very bearish for risk. From our perspective, we did get a nice little trade in this one. We had that tight volatility, which I've discussed frequently. If you get tight sideways volatility, you can always look for a big breakout. And that's kind of what we got in our favour. So a really good move. And it's such a good move, I've taken 50% away. Just simply, big profit in a short period of time. But I will be looking to see how this pair performs and buy a dip or maybe buy further strength. And if I look at it right now, because I did this chart a couple of hours ago, markets are moving quite quickly today. So we're going to have a look at it. Oh, look, she's back up at the 7 level. If the yuan continues to weaken on the USD, Safe currencies basically are buy on risk currencies. It's a simple strategy, I know, but it's working out quite nicely. I know my notes up the top here, I did say that I did expect the People's Bank of China to do what they've done, but that has been there for a couple of months, no more than that, I think about 2 or 3 months, no, 3 months plus. But it has come to fruition. So patience with it. Nice trade. Now, in terms of how would I put it? There's two other contracts we need to look at. Again, they're going to impact on what goes on in the Forex market. So you should keep your eye on them. You should keep your eye on this trade, as I've just said. More strength in the USD. Very bullish, the safe over the risk currencies. And let's go look at the other two contracts. I need to get my menu back, but we need stocks and bond markets, because what's going on there is very interesting. So let me just make my charts a little bit bigger. Stock market, first of all, it's the S&P 500 in the States. Was falling quite nicely last week. We've kind of gapped at the open today. You've got slow global growth anyway, okay? Then you've got an escalation of trade wars. The market was just low volumes anyway, which normally points to a big break. And of course, stocks going down, bullish safe currencies over risk currencies. Did this chart an hour and a half ago, so let's see what it's doing. Yeah, it's looking nice and red and following through. A nice sweet close here. It was obviously, I keep saying it, don't I? I'm going to stop saying it now, but it's bullish for safe currencies over risk currencies. Also, here's a contract not many traders look at, but it gave us a clue last week that the yen and the safe haven currencies would soar. And it's the 10-year note. Just if you're unfamiliar with this, you should always watch it if you're a Forex trader, because if it's going down, just in simple terms, means the perception of US rates is going down. And you can see a big red candle on Friday. Now, that's just bullish safe over risk currencies. So we could ramp up our yen and dollar trades. And we've seen a gap today, although I did this chart, we were blue. If this chart continues to see T-note weakness, indicating interest rates in the US being low and a recession in the US economy, it's going to impact on stocks, of course, create more risk off. We'll just take a quick look at where the T-note is. Not doing too much, but all three contracts indicate basically that we're going to get more volatility in the markets, and it's not looking pretty in global financial markets at all, and that's creating the volatility we're seeing in the Forex market. So let's go and take a look at some pairs that we really like, and we're going to start with some major currencies. I'm going to start with is Euro USD. Perhaps not the most volatile pair at the moment, but I know a lot of people follow it, so I'll have a quick look at it. And a lot of people in the member centre asked why have I put my stop so close this morning. Put it to 111.70. I just wanted to lock in some profit. The euro was coming up. It could run on a bit. You can see in my notes, possibly above 112. So just sort of take something in. Longer term, I'm just so bearish of the euro. I've made it clear in videos recently. I see no good news coming for the euro, and the rally is a selling opportunity. And if you look at Euro USD, up she comes. So if she leaps above 112, we'll sell her, or on weakness from here. I'll bring up the level that we're going to do our sell. I'll do that in the PM blog. We might see a little bit more upside. The euro's been pretty stubborn recently in terms of it hasn't fallen as hard as we thought, but everything in terms of big fundamentals is against the euro. Long way to go on the downside. Perhaps not the most exciting pair, but I know a lot of people look at it. So that's my view there. British pound USD, I covered that in a video yesterday, one before this one, so you can go and take a look at that. This pair, any commodity currency, just a sell. Okay. Now, in terms of this move down, obviously it looks quite steep on the chart. It is, steep on the chart, but the volatility is still relatively low. Okay. Our trade, what is it? Up about 300 pips. But the way the market's looking at the moment, we could see moves of 1,000 pips or more pretty quickly. There's no reason, in my view, to be bullish of the AUD. Just think back to what's going on in China. Okay, China's its major export market. It's devaluing its currency. It's slowing up fast. We've got risk off. That's bearish the AUD as well. And when markets run down like this, and a lot of traders think I'll just wait for pullbacks, in my view, is get in with a small trade. And if the pullback comes, basically you can take it. But you're in. Okay, I mean a pullback will come eventually, but I know a good few traders have been waiting for a pullback for over a week. It hasn't occurred. Okay, so you're best off being, you don't need big trades, small trade in. Then when the pullback comes, it inevitably will, you can look to sell. Okay, so very bearish of AUD, USD, and you can see where I think the key levels are in terms of selling back to. What have we got next? Got the USD JPY. Bearish, obviously, saying it in the video at the weekend, which you can go and look at. I won't go through all the reasons why we're bullish of the yen. The year's got everything in its favour in our view. And we did say at the weekend, if you are bearish, you had two big candles the downside, just put a small trade in. If you had, then you'll have some profit already, and you can always sell the bounce when it comes. Now, for us, JPY, everything going for it. It's our favourite long-term trend. I put targets of 105, then 100. I personally think we might even go to 90 or 80 longer term. We don't know what's going to happen, of course, but I'm at this moment in time very, kind of worried about what's going on in global financial markets, and the yen is going to be the major beneficiary. That one I know hasn't done much since I updated my chart. Also, incidentally, if you've got a trade in, you can sell a rally, okay, but you can also sell a break of 105. And I did a chart on my Facebook page about an hour ago, which goes through the logic of this. It's a massive level for the USD, but to sell on rallies for sure are going a long way to the downside in our view. What do we got next? We've got the CAD. This one hasn't moved as hard as I expected, actually, but it's a commodity currency. It's very sensitive to risk off. Let's see where it is. Yeah, you see the USD is not particularly firm today, but I said the CAD is the most, in previous videos, the CAD is the most overbought major currency. This one really is a kind of, it's a minorish profit, as you can see. It's not a big one, but the CAD is a sell on numerous other majors. It's very, very overbought, and I'm sticking with this trade. Obviously, I bought the stop up just in case to lock a little bit of profit if we do get stopped out. But I'm hoping we can move up to at least that 135 level, and if things get really bad, I'll extend that target to 138. Now what we're going to do is look at some crosses and also some more yen trades. So let's go and take a look at them. Right, Euro JPY, one of many kind of yen long trades we like. This is a particular favourite of ours in terms of a long-term trend. And it's going really nice at the moment, about 400 pips. But in terms of getting into this trade, for anyone who's interested, sell back to 119, round number. Stop behind 120, one level back. Okay, so you're not going to be risking too much But you can see the targets, 115.50, which is pretty close now, then 100. That's a long way down. Everything favours the yen over the euro from our perspective, and it's definitely one of our favourite longer term trades. And we're following it down for a while, hoping we're going to be following it down a lot longer as well. In terms of pair I want to look at next, a lot of people say it's a bit boring, but I really like it because longer term it just looks so good. It's AUD CAD. Now, in terms of two risk currencies together, haven't you? So you've got, well, I say risk currencies, also commodity currencies. Which is the better one? Where's the CAD? Because if you look at it, Canada's exposed to the US economy, major trading partner. Australia's exposed to China, which is obviously having a lot of problems. I've had this view for a while. And okay, it's been a kind of slow move down. It's not been the most volatile pair. But, it's about 400 pips. So it's decent. And, this is another tactic you can use. Obviously you have to decide when enough is enough, bring your stop in and take partial profits. And I brought my stop in pretty close, okay? But if you rally and you get stopped out, you can always come back in. You could key off the next round number, the 20-day moving average. A bit similar to what we've done in Euro USD. Although we're pretty kind of optimistic of our view, no one knows what's going to happen. So sometimes, coming out, then coming back in is a good idea, especially when you've got enough profit in your view. Right, let's go and have a look at some more USD and yen pairs. And when we talk about risk currencies, we've said obviously commodity currencies are risk currencies, which they are. What about the more minor currencies? They're the next level up in terms of risk. So it's always good to have some minor currencies against safe as well, because you can very often make bigger profits. And we'll just go and take a look at some more risk currencies against safe. It's on NZD USD, and I'm really liking the look of this pair. Obviously, I like the look of AUD USD, but what I like about this one is the NZD had much more of an impressive rally in our view, and the move down has been pretty gentle. Okay, I've got a feeling the NZD will accelerate to the downside and might do better than AUD USD. And I just see a 66 level here as pretty firm resistance. So any rally up to here and we start to fail or into the 66 level, look to sell. And then, you've got 60 on the downside as the first target. And I think there's one beneath that, which is 53. But New Zealand exposed to China, risk currency, good sell in our view. So one, keep your eye on in terms of, it's going to offer, I think, a good fresh entry. USD SEK. Not going to talk about euro correlated currencies too much in this video. I'll just look at this one. I'll do another video in the next couple of days. But if you're bearish of the euro, just sell the minor European currencies like the Swedish krona, Norwegian krona, Czech krona, Polish zloty, whichever one you wish. Because if you look at those charts, the USD is hammered every minor European currency. And if the euro's going down, these currencies will go down quicker. So if you're euro bearish, hit the correlated currencies. Nice move up in this one. I'll do a video on the euro and the proxies next few days. What have we got next? In terms of, we looked obviously AUD CAD and we said a nice kind of a gentle trend, but a really good trend. This one's similar. We've been following it down since the highs. Swissy, a safe haven against the euro. Looks good. It's a bit like a less volatile euro JPY. Broken out to new lows, nearly at first target 108, but we should run on at least 106. Swiss franc. A lot of people get frightened by the volatility of the yen pairs. Well, the Swissy is just the gentler alternative. And if you look at what it did on the CAD, we did a video on that recently. CHF has hit the CAD hard, and the AUD and the NZD. So a safer, a less volatile alternative. What have we got next? I've got a euro New Zealand dollar here. And this is where we've gone long of the euro, also gone long of euro CAD. Why? Because the euro is perceived as a safer currency than the commodity currencies. Are just safe over risk. I mean, I'm not a bull of the euro on the safe currencies, but it's a really good trade. And yeah, you can do that. In terms of have a bullish view on certain currencies, a bearish view on others. It's a great trade, that one. I wish I'd have put more money on it. I put a minuscule position on it, but that's the way it goes. Anyway, what do we got next? AUD JPY, and yeah, volatility's really picked up. That is a round number. You can sell back to that. That's the other round number there. So you can play round numbers, stop behind. How far is it going? Our view down to 60. Okay, could go even lower. CAD JPY, this one hasn't really done that much for us yet. This hasn't been too volatile like AUD JPY. It's a nice tumble, and a good way of playing what's happened is, again, use two round numbers. This one here, take on a clear break of the round number to the downside, or sell it back to the round number, or come off it on weakness. Either or. This one, I've got a feeling it's going to go down a lot further. I've got 70, but it could go even lower than that. So some interesting pairs on this page. I'm just going to finish up with a few more, one that particularly interests me at the moment. So just going to switch a final few pairs. So the final few pairs. This one is GBP CAD. I did do a video at the weekend on the GBP, but I didn't release it to all the subscribers on YouTube. So if you haven't seen it, you can go and take a look at it. But we're taking the view Brexit bearish news is priced in, and what interests us is the GBP. In times of financial turbulence, seen as a safer currency than the CAD, and you've got very tight sideways here, low volatility, just a move through 160. 30 would do it from here, and I think we'll be off to the upside. 170 could go even higher. So one to keep your eye on, because I think it's got fantastic risk to reward. Now let's go to a pair that is a lesser looked at pair, and we look at a lot of lesser looked at pairs, but they very often give you good trading opportunities. This is USD against the Singapore dollar. If you're bearish of China, obviously Singapore is a major hub in Asia, has a lot of exposure to China. USD should go higher. It's quite a gentle moving pair. It's gone up quite nicely so far. Could easily go on another 550 pips to the upside. Worth looking at, in my view, on a breakout or a dip lower. These are more Euro proxies, which I'll cover in another video, but you can see that's the USD PLN. Great move to the upside. Here's another commodity currency, which I didn't put a trade on, actually, although I did analysis on it, which I wish I had done because it soared to the upside. It's USD ZAR. And emerging market currencies, are going to be very weak in terms of the weakest currencies, even weaker than obviously commodity currencies. A breakout here up to 15.50, and the USD's done it on a few emerging market currencies, moved nicely higher. Another one would be the USD Mexican peso, which we've got a small position in, and USD rub as well. Go and look at the USD rub. It's hammering these emerging markets, and I think it's going to hammer them even more. Obviously, another Japanese yen pair. That's a really nice fall, but more downside to come. We're nearly at first target. We should get to 60, in my view. And I know I keep stressing it, but commodity currency is just such a raging sell on the safe havens, and also on the British pound, in my view, if the British pound firms up. Last pair, and it's one that basically is very similar to AUD CAD. This is NZD CAD, and generally a nice move down, but it's had quite a nice rally. It's not that big a fall yet, but we're at new daily lows, and I've got a feeling this one is going to do the same as AUD USD, but could move quicker to the downside. NZD, I don't know if I said earlier, obviously a big exposure to China. Now, in terms of one point I'll stress, a lot of people seeing what we're looking at the moment in terms of volatility as big volatility. It's only if you haven't been trading for a good few years. If you've been trading for a while, you'll know that the volatility is not that high, okay, or it hasn't been recently. But with what's going on in financial markets, it could get really big. And at the moment, plenty of 300, 400, 500 pip moves that we've caught, but they could become 1,000 pip moves. The volatility could just really, really start to accelerate. It's been too low for too long. There's nothing to be frightened of either. In terms of, you want high volatility, and and I'm going to stress it again, which I think I stressed it maybe earlier in the last video I did. But in terms of a simple Forex trading method at the moment, just focusing on big levels, catching the safe currencies, buying them on the risk currencies at the right time with your technicals, can make you a lot of money. Okay. And in terms of, you've seen, obviously, we list our trades out daily. We've got numerous big moves. Okay, it's been a good time trading, but they are there, and you can catch them with a simple strategy. And if we can do it, anyone can do it. Obviously, I'll do some more videos next few days. Markets are volatile, which is what we want. Feature the euro and the proxies, for example. You can, of course, write to me at any time if you have any questions or queries. But it's nice to see the volatility back. Of course, things can change. Suddenly there might be some peace in trade wars, or stock market might get some good news from somewhere. I just don't see it at the moment, but it is my view as of this moment of time, of course. But interesting times ahead. A good volatile start to the week. Let's hope it continues. Right, that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.